Good old Bitcoin, slight recovery, but still on thin ice. Ethereum still capped, having a hard time getting through 4,100. Unbelievable market. And we got the $1 million question right now. Does this end with a 100K retest or a fresh leg higher? Now, beneath the charts, there's something most traders miss. And I'm going to be talking to you today about the truth about volume. And I'm going to show you why the crowd is mostly wrong most of the time. So buckle in. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in crypto and Bitcoin action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And of course, come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into it. As I said, I'm going to have like a little section, my take on volume today, because I try to give you guys a little bit of a diversified view on things. I've been around a long time, and I've seen things when I first started in the business, like the colloquialisms that everybody follows. And I'm going to just give you what I see with volume, and maybe you'll find it interesting. But I want to always give you something that could make you the smartest trader at the bar or at the dinner table. All right, so let's get right into it right now. So we got Bitcoin hanging right around 109,500 right now. After it's struggling to hold its foothold or its footing after that failed $114,000 test. Okay, we came back down, and I said yesterday when we were looking at this chart, when we spiked down to this price point here, I said I did not like it. I didn't like it at all. I said most likely we're going to get another retest. And I said at the point I was talking about a market law where we say that the market can actually cover the same ground twice, right? So let me get like a little path here. So covering the same ground twice is like something like this. Market came up, right? Made this top. Now, this is basically a double bottom at this point. But covering the same ground twice would have been coming down to this low right there, that 103, that all important 103 low. And then we would need to see, for recovery, we would need to see back, up a break above, say, 111, right? Like right there. That's basically covering the same ground twice. We didn't really do that. We just made a double bottom, which I'm quite happy with. Okay, I'm quite happy with. All right, so right now, as it stands, all right, Bitcoin, we went down to 106, like say 666. So we got to get over. I'm gonna say 110, 110. If we can get over like 110.3, I'll take that. 110.280. If we can get above this 110.280, we're showing some potential recalibration of Bitcoin. Remember, now tomorrow we have important numbers coming, right? Right? Tomorrow's Friday. Yeah, we have the numbers that are coming out that are basically going to give us the idea whether or not the Fed is going to continue easing or they're going to put things on hold for the time being. 78% of market participants believe that there's another rate cut coming. Like I said, Powell's a skunk, so I think I'll go with what the consensus is right now, because he's going to be on his way out, and there's going to be new people that Trump bring into the Fed that are going to be actually really pro. They're going to be dovish, right? They're not going to be hawkish. They're going to be dovish. So we're going to go through another quantitative easing again in the U.S. where we get some rate cuts, which would be good. It'd be great for Bitcoin. Okay, now. Of course, the other side of the coin is, well, would it really be good for inflation? Well, if you get the economy started and the economy rocking, then inflation will be stabilized. Okay, so it's a two-sided coin. It's a very, very thin line to walk. But as it stands right now, we got 2 points in the sand right now in Bitcoin. The 103 and the $102,000 mark right there from we had the ADL, right? Automatic deleveraging happened. This is really the most important key point. We lose this, we're going to be testing 102. We break 102, we're looking at that $100,000 retest and potentially even lower. Because as we said before, there is that potential double top, that storm that's lingering over the marketplace still to this point. The only way we clear this out is if we clear above 127,000. So we got a lot of wood to chop. We got a lot of stuff to get through. Now, we could get a big spark upward if all of a sudden, the data comes in and was like, oh yeah, definitely, totally, 100% rate cut in the works. Yeah, we could get the spike. And that's why I'm going to talk to you about volume later in the video. So stick around. You're going to want to you're going to want to hear my take on volume. All right. So right now the double top is haunting us in the marketplace. We had a double top also on this bloody 2 hour. Okay, we had this one, and we had when we rallied up to this point right there. So as it stands right now for Bitcoin, first, all right, short term. Okay, of course I'm talking about short term because the marketplace. This is only a 2 hour chart, right? This double bottom, very important to hold short term. Then the critical price is actually down here. Okay, that's the critical price. The 103, 528. Now, in order to show any type of strength, we got to close above, say, 110.3. And we got to hold the line between 110.3 and I'll say 108.4. And then if we start trading in between these 2 points, we have a potential to basically test this top again, but it'll probably be rejected because before the numbers come out, the marketplace is going to be a little sketchy. But I'm going to get into volume, which is going to be really cool. It's going to be a really cool section. But the double top, that we're looking at, all right, on, we got our analysts, our analysts in our group are saying if we lose 106 on the weekly, that's the first warning of a deeper test. I agree with that, but really, I think the point's 103, right off of that major low, like the higher low that we had after that automatic deleveraging spike down. All right, so we know that Bitcoin is in a make or break zone right now. Okay, we've shown the use chart a few times. We've tested the support I would say 4 times already. Okay, now in the past it acted as resistance 5 times before the breakout. If you remember when we were stuck at 106, it was just there. I mean, 106, we were having such a hard time getting through it. It wasn't that long ago, but if you remember, we were stuck there for a while. Now, once we broke out, it's now starting to act as support. That's why we're thinking, Frank's thinking the 106 is really important level. We don't want to give that up on the weekly basis, or else we're going to get a deeper, retest. Overall, the thing, in my opinion, is going much higher. Now, of course, if you're a day trader, you don't really care about what's going to be 3 months from now. You care about what's going to be 3 hours from now, right? So I gave you the points on the short-term chart, all right? Right now, it's really where the bulls have drawn the line so far. So the support has held again. But I'm telling you, man, the black hats are pushing. They're pushing. So just be prepared. That's why you got to get into a live, into our pro group. We'll help you out. We can see the black hats from a mile away. We know when they're starting to try to manipulate things. And of course, there's a lot of manipulation. Yes. I see the comments on our YouTube. Yes, of course, there's manipulation. But hey, this is the market we chose, right? So, I mean, there's manipulation in every market. I could tell you stories about Berlusconi in Italy with Mark Lira, and I won't get into it because it'll take a little while to explain, but let me tell you something. That guy was a master manipulator. Silvio Berlusconi, man, unbelievable what he did to the Mark Lira market. And he was the prime minister of Italy. He basically said, the mark could just keep appreciating against the lira. Oh, man, I could tell you a story about that day. That was insane. He said it on a Sunday. He came out on his bathrobe, drinking an espresso, and made a comment. Congratulations. Oof. That was a rough day for me. I'll tell you that much. Rough day. But anyway, we got buyers that are stacked. We got sellers that are slightly fading. Okay, but there's big guns out there. The big guns are pushing. So, as we said, if we lose it on a weekly, basis, it's going to be tough. We're going to be looking at 103, 100,000. If we can hold this line, The next level is the 127, 130,000 is next because Bitcoin is still trapped. And it's still trapped, as I said yesterday, in a liquidity cage. Buyers, the buyer's volume profile on the chart is the name of the indicator I have up here. The resistance is stacked at 116 through 118. Support 103, like 106. The order book is quite thick. It's going to be a breakout, or if it's going to be it will be a breakout upward, which would be pretty powerful, but we got to get through the 118, as we've been saying. But a breakdown will be really nuclear. Okay, so a big squeeze is coming, so you got to be ready for it. That's why I say you got to join our pro group. Will help you out because a lot of traders think that the old cycle is dead, right? We talked about this before. The old Bitcoin cycle is dead. That's what they're saying. The 1064, 364 rhythm defined every cycle until now. Because this time the Fed just flipped. And monetary easing just returned. So the liquidity is going to be the new driver of this market. So forget about the clock. It's about capital velocity. And that, when they cut the rate, it's going to be a big infusion into Bitcoin. Okay? So it's all about capital velocity. So gold has been the star of the show for quite a while. We know that. And if we refer to gold as a means of looking at Bitcoin itself, we could look at gold and we could say, look at this. Gold rode the exact channel before launching upward to historic new highs. Bitcoin right now is following the same channel, same path, step by step. Same structure, same rhythm, same squeeze. But this time it's digital, right? So this is the digital gold that we're looking at. So really what we need to do is we need to get through the 126, and then we're on our path of breaking out. And God forbid we break out through this top. Forget it. It's going to really be, the bears are really going to be like screaming that, oh, it's over. It's going back down to 40,000. But anyway, so let's move on over to good old Ethereum. All right. And we talked about this. Ethereum is in a bullish pennant pattern on the monthly. So it takes quite a while for it to work because this is a monthly chart. Okay. Now we got Ethereum that's trapped between 3,700 and 3,900. The bulls have tried to reclaim 4K, but the seller slammed the door again. The bears up top are vicious. They are vicious. Now, resistance right now sits between 4,050 and 4,100. I'm thinking a daily close above 4,100 opens the door for run back towards 4,500. Now, until we see a clean daily close above 4K, Ethereum's going to remain capped. But the monthly bullish pennant is still at work. Now, on the positive side of this thing, on the positive side, if we look and we compare Bitcoin and Ethereum side by side, but before we even get into that, on the positive side, ETF inflows topped 600 million this week. So what does that mean? Institutional demand hasn't vanished. It's just waiting for confirmation. So now the only issue that we have right now, what's stopping the pros right now is this main point. The charts are still printing lower highs right now. For us, for like old institutional guys, that's a warning. We need breakouts to actually be confirmations, right? Good breakouts. I mean, I'm not saying buy breakouts, but I'm just saying as longer term, you need good breakouts. So pros are watching closely for whether this becomes a distribution before the next flush downward so that they can grab coin cheaper. It's all about them looking to get the coin cheaper. All right. Now, if we look at Bitcoin, what Bitcoin did, a 500% after breaking a macro trend line. Okay. Ethereum broke the same trend line. It's the same structure. Breakout, retest, liftoff. Okay. So the chart's speaking. Okay. And price is going to follow eventually. Just got to be patient. Okay. You got to be patient. You got to pick your battles. You got to pick your points. Okay. Now, If we look at Bitcoin, how it reacted to, like, say, currency stress, for instance. Hang on, let me pull up that chart. What I'm comparing here is how Bitcoin reacted to currency stress. Where we had the yen carry trade. Okay, that was that was that lasted for quite a long time. It still gets popped on once in a while because even traders in the forex market really don't have a great idea of what's going on with the Bank of Japan right now. But if we look at Ethereum, we have the tariffs 2.0. That's the problem. So Ethereum's responding right now to geopolitics. It's the same playbook that's unfolding, right? Always. It's same fear, same zone, same explosion incoming. Okay, that's what we can see. All right, that's what we can see. So if we come on over to good old Bitcoin dominance, which is actually keeping a cap on everything, we could see it right here. Bitcoin dominance is sitting at 59.83. It's not changed. All right. So with Bitcoin dominance here, what's occurring is that altcoins are still, in the penalty box. All right. Now there's some that standouts, but the rest like Solana, XRP, ADA are all down 2 to 4%. But there's one that popped up on my radar screen, Zcash, which is ZEC, which is the lone standout. Now it's been 7 straight days that the altcoin index is actually down. So that means that capital is rotating back into Bitcoin and stable coins, right? So that's what we're seeing happen right now. So we know that when altcoin fear, like fear creates fortunes, right? I mean, we showed you this chart yesterday, and it's a very important chart because when we start to talk about volume after this, we could see that every cycle it's the same setup. Retail panics, whales accumulate, the brave buy, the quiet silence, and the loud sell fear. Okay, that's the way it goes. And that's the way the market rolls all the time, every day, every week, every month, every year. It's the same story, but it's also the same way how generational wealth is built over and over again. All right, now I'm going to get into something that's a little bit different today. It's Thursday. I gave you the points that we got to watch. I'm expecting the market to be kind of quiet today. I would like to see a breakout upward, just to get a little bit of relief for the bulls and put the bears a bit on their back heels. But let's talk about volume, because this is something that I think is very, very important. It's one of the most misunderstood metrics in the whole game, in my opinion. Many traders believe that prices must rise on, or price rises must be confirmed by rising volume. That's what I was always taught, right? That was one of the first things, maybe not the first thing, but one of the things I heard when I was a junior trader, like, hey, you got to watch, rising price, is confirmed by rising volume. Sounds logical until you actually start to study how markets behave across real cycles, all right? And here's the point. After a market, let's take you over to here. After a market makes a major low right here, okay? I want to see light volume. So now this was a major low, but a really fast spike. So like right here, let's work from this low, okay? What I'd like to see right here is I'd like to see light volume, not heavy volume down at this low. Why? Because light volume tells me that supply has dried up. Sellers are exhausted. Now, one of the biggest myths that I hear is like somebody saying, I bought the absolute low. In reality, true bottoms form when there's nobody left to sell, not when the crowd piles in, okay? So when you see huge upside volume at a new low, that's usually short covering, not real buying. And those rallies are steep, like this one, but they're short-lived. It's not real buying. Those rallies, basically, they create what I call a price vacuum that sends the market right back down once that forced buying ends. So it's just completely short covering. So like right now, after this big spike, this big movement up, okay, there was probably a huge amount of volume on that. And then look what happened. The marketplace just cooled down. So what I'm saying is I like to see low volume on the top side and the bottom side. Now, I was first introduced to this. I'm taking you back, all right? Probably before most of you guys were born, all right? There was a brilliant observation that I read back in 1987. Yeah. Wow. And the gentleman's name was Richard Russell. And he was the a writer. Actually, I think he was the founder of Dow Theory Letters or something like that. Dow Theory Forecast, Dow Theory Letter. So, and he was bringing up a point, and in this, he was talking about, at this point, he was actually referring back to the 1970s. Okay, so this is how far. It was in 87. I read the article, but the man was referring to the 1970s. And what he noted was that heavy volume near prior highs doesn't mean confirmation. It often signals resistance. And I said, what? That's contrary to everything I just, what I was learning, right? But you know what? He was right. The market stalled and reversed before breaking those highs. What was the lesson? Too much volume, too soon, could be a ceiling, not a catalyst. Think about that. That's an important point. So if you're watching volume, right, I'm giving you really a paradigm shift on volume. I'm going to say it again, all right? Too much volume too soon could be a ceiling, not a catalyst. It's basically just short covering. It's not going to be the breakout of the high. We want to see low volume. Low volume means that the sellers are exhausted, right? And you want to see low volume at the tops as well before the breakout. Okay, so there was a brilliant observation. So what I started doing was I started like doing some research, and I believe that the healthiest rallies start very quietly. Price rising on light volume. That tells you the supply is thin and the buyers are like tiptoeing in before the crowd notices. The big guns are slowly accumulating before the crowd notices. Now, once price clears the old high, then I want to see the volume explode. That's where you get the 1-2 punch. Short covering and stop buying fuel the breakout. Because generally when you go through a new high, you got trend followers coming in as well. The trend followers are going to come pile in. All right, like the Richard Dennis's of the world, the turtles, looking for 20-day breakouts or 55-day breakouts. They're going to jump in. So the same rule applies in reverse for breakdowns and fresh lows. So next time you see heavy volume before the breakout, think twice. It might be the crowd exhausting itself before the real move actually starts. We could get another pullback before the real move starts. All right, so with that, before we wrap up, I'm going to make sure that you're well aware of our crypto trading community. We drop insane right here. Link in the description is right there. Take you over to our Telegram. It's a free community. We drop insane alpha trading opportunities daily, breakout setups, long-term gems. We got you covered in there. It's totally free to join. It's where serious traders get together. To make your trading even smoother, we partnered with 2 top-tier exchanges, FOREX, offering insane bonuses, low fees, fast execution, perfect for our strategies. BTCC, now giving out new clients $500 US dollar giveaway. So join the crew, level up your trading. Let's stack the profits together. These are 2 excellent brokers. You should seriously consider getting an account through our link through because they offer insane bonuses. All right, so in closing, all right, what we got going on here is we got Bitcoin. It says testing everybody's metal right now. We got the news. We got the potential breakout coming, or breakdown actually, after tomorrow's numbers. I like to see it kind of basically consolidate a little bit. Give us some room. Most important point right now is the first warning level, 106.6. Next warning level is actually, well, you got 2, right? You got this new low, you got the old 106, and you got this major low right there. Very, very important to hold. Need to crawl back above 110, like 3. get us some like breathing room for the bulls. Then we need to get through the 112 and of course take out the 114. I think it's going to be a quiet day today. So remember, come on over to X. Follow us on X where we talk about Bitcoin, crypto all day, every day. So what do you got to do? Well, you got to remember that the market's testing your patience right now. But remember, real traders make their money between the extremes, not just at them. So stay sharp. Make sure you trade with your head, not over it. Do your own research. Okay, I am not a financial advisor. I'm a trader just like you. And keep your eyes on the structure of the marketplace, not the noise. I'll see you tomorrow. And remember, always, 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 as a short-term trader, enjoy the party, but dance near the door. Cheers.